Customers are likely to prioritize certain kind of projects over others.
All right, with that we go across to Surabhi. Surabhi, what are brokerages saying about TCS?
Well, TCS is one stock that has divided the street right down the middle. We are talking about target prices that range from 4,500 on the upside to 2,700 on the downside. So let me take you through the bull's view, the bear's view, and also all those who are in between. The company's fourth quarter miss has got the bears out in full force. JP Morgan has been underweight on the stock for quite a while, with possibly one of the lowest target prices on the street at 2,700 rupees. The bank says the BFSI weakness was unexpected, and the uncertainty on tech spends will lead to a softer first half for TCS. JP Morgan has cut its revenue and EPS estimates by 1 to 2% respectively. The next big bear is Nomura, with a reduced rating and a target price which is just below JP Morgan at 2,850. Now, Nomura says the near-term business visibility is low and also points out that the headcount addition in the fourth quarter has been weak and that TCS has missed its margin guidance for the entire year, that's FY23. Citi is also part of the bear camp with a sell call and a target price of 3,000. The bank feels that valuations are still high on the stock and street estimates on margins may have to be trimmed given the impending wage hikes. Now let's see how the bulls are seeing the TCS story, the green side of the screen. Macquarie has one of the biggest targets on the stock. They have an outperform rating with a target price of 4,510, and that's a 40% upside from where the stock is right now. So what's Macquarie's argument? They're saying that revenue and margin miss is due to temporary issues. The brokerage argues that deal wins are strong and that the business is still poised for growth. The brokerage expects TCS to get back to its target margin band of 26 to 28% this year itself. That sentiment is echoed by Bernstein, which points out that the order book remains healthy, even though there is uncertainty on BFSI spends, at least in the here and now. Bernstein has an outperform rating on the stock. Their target price comes in at 3,560. Let's move on and talk about the next participant in the bulls camp. That's CLSA, another big TCS bull, with the target price very close to Bernstein at just around 3,550 and an outperform rating. CLSA says that TCS's structural strength will actually support the company in this uncertain IT spending environment. Compelling arguments coming in from both the bulls and the bears, and that brings us to the fence sitters. Jefferies has a hold rating on the stock with a target price of 33.75. Morgan Stanley has an equal weight rating. Their target is 33.50, just below Jefferies. So Jefferies is sounding a cautious note on the client uncertainty and the subdued headcount addition that we've seen from TCS in this quarter. It has also cut its earnings estimates by 2 to 3%. It expects TCS to deliver a 6.7% constant currency growth. Morgan Stanley says it's not yet clear if client sentiment has troughed out in this quarter, in Q4 itself. The brokerage says that valuations are still quite high and they're higher than the long-term average, making the risk-reward unattractive. So there you have it, the black, the white, and the grey of all the street views on TCS.
Okay, pretty mixed this one. Thanks a lot for that. But I guess now we're going to move on, right? We're going to look at Infosys, which will report its Q4 numbers later today, and that's what the street is